the year-over-year inflation rate has dropped in June to 2.7%, which has led the Bank of Canada to move softly on their overnight rate, dropping it by a quarter point down to 4.5% effective this morning. Now, the Bank of Canada is looking at the weak economic numbers, and consumer spending is not enough to support the economy. People are worried about how much extra these mortgage payments are going to take out of their paycheck, and instead of diverting all to consumer spending, which supports the economy, they're going to spend a lot more because the interest cost is rising significantly, especially on these people that have maybe enjoyed a 1, 2, or maybe even 3% mortgage over the last 3, 4, 5 years. This was widely expected, this rate cut. It didn't surprise anybody. The Canadian dollar hasn't really moved because the international foreign exchange markets have already priced in the Canadian dollar weakness compared to the US dollar. Tiff Macklem has faced a ton of pressure and criticism for making wrong decisions or delayed decisions. For example, in 2020, he came to Canada with a news release saying that interest rates are going to remain lower for longer, and he delayed moving on rates when inflation had already been pervasive in the economy. So future interest rates are predicted to continue to go down based on a weak economy, higher than expected unemployment, a very large pool of unemployed people in this country, and just generally a softening of the economy, plus the mortgage rate risk, which could put thousands of Canadians under deep financial pressure. Remains to be seen as we look forward to the next Bank of Canada announcement.